thank you very much for joining. You've heard all the gratitudes and reflections on how important it is for us to be able to get together after a 5-year break. So just to repeat that, it's wonderful to be able to have this energy in the room and the discussion. And we had a very good panel before us. I also wanted to remind everybody we had about 500 people sign up for the streaming part of that conference. I don't know how many are connected now. We're going to try to keep on schedule to also accommodate them, but between 300 plus in this room and 500, this is a very good, well-attended event. So maybe a brief introduction of our speakers, and I'll join them in a minute. But we have Walt Reynoldson, the CEO of Casa Bravo from Mexico, a combination of private equity, real estate, essentially a experienced developer of alternative housing finance platform, and focused on 2 key aspects that we've been talking about this morning: financial inclusion and wealth accumulation. It's going to come out in the discussion, and especially nicely keyed off from the other panel because his business is quite focused on rent-to-own models and something that actually works. Then we have Eddie, Eduardo Tabush, who's the CEO of Urbana Housing Fund, who's been working on development of public policies for housing finance in a number of Central American countries. Urbana today is the fund that originates affordable housing projects, that prepares them and sells them to commercial developers when the project's building permits are ready to go, in a sense, shortening very significantly the timeline that it takes for the development to actually take place. And then we have Vipul Rongta, who's the managing director and CEO of HDFC Capital Advisors from India. He's representing the large real estate private equity arm of HDFC Group, manages one of the largest residential sector focused funds in India, and has financed the development of more than 215,000 affordable homes across many different projects in urban areas across India. Very successful. One of the things that Vipul told me when we spoke is really you have to remember that building affordable doesn't mean it's commercially non-attractive. We're going to hear about more of that as we go along. And then we have Glen Jordan, who is the CEO of Empowa, serial entrepreneur, focused on linking funding to financially excluded Africans, pilot project in Mozambique. We're going to hear about it more. Also quite closely connected to this whole concept of rent to own and increasing ownership through bringing in more people into the formal or informal economy through using very interesting technological solutions. We're going to hear more of that in a minute. But the one thing that I wanted to start with is just to bring us all into that whole concept of how diverse this panel is. It obviously represents different regions that we had seen already in one before, but because of the focus on different parts of the value chain in housing and housing finance, and bringing the housing to the affordability and to the better climate impact, we're going to see and hear of different kinds of models. So hopefully we can hear about things which are replicable in other regions, that we can hear about things which can be moved from one region to another. And we as IFC, I should have probably said something first for those of you who don't know, my name is Tomáš Selma, I'm a global director for FIG at IFC. For us at IFC, it also represents an opportunity to tell you how IFC gets involved in financing different parts of private sector's involvement in different parts of the value chain in providing housing finance. So with that, I'm going to take my seat with all the other. Glen, maybe we go to you so you can explain to everybody what is that you actually do, what triggered your interest in that particular part of the value chain in housing, and especially in markets where you operate. That whole 80% number, which like dawned on me after we spoke last week, the how informal incomes are in many of the markets where we all operate. And take it from there.
Yeah, thanks. So we operate in Africa, and in Africa, more than 80% of income is informal, which means by definition, they're excluded. 80% of the market is excluded from housing, from the ability to purchase a home, which the results obviously we see today. So how do we overcome that problem? And with understanding and respect for the banks, they're dealing with different issues. They have depositors funds, they have credit issues that they have to deal with. So we have to look outside of the traditional funding models in order for funding to get to the market. We also have to enable the rent-to-own models, different models for purchasing, because by definition, informal income is erratic. So how do we devise a product that supports that process, that actually meets that market need? And then how do we provide that information back to the investors in such a way that they can trust that information? And one of the key technologies that is put up but hasn't been referred to once is interesting, is the blockchain technology. And blockchain, and I'm not here talking about the speculative side of blockchain, but blockchain as it's supposed to be used is the ability to record and verify information in such a way that trust can be built. And that's what investors are looking for. So to be able to provide a view to investors, a mechanism by which they can see how their portfolio is performing, the rent-to-own portfolio. And earlier it was spoken about, government portfolios not working. That becomes visible very quickly. So collections can happen very quickly and methodologies can be implemented to manage that. So a key part around it is how do we build a platform? And that's what Empowa is working on, is to build a platform to link rent-to-own to alternative sources of capital in such a way that the flows can go back and forth cost effectively and in a verified manner.
Okay. So I'm going to ask you about regulation of all of that in the next round. If you just keep that in mind, because for us more sometimes traditional bankers, that's one of the challenges in accepting those alternative financing platforms that you guys are putting in place. But rent-to-own connects also with what you guys do in Casa Bravo. How do you scale it up? I mean, what are the biggest challenges in scaling this up? I know you have a successful pilot model in place already. I'm kind of curious if you could weave into this whole aspect of regulating informal financing platforms. What needs to be addressed for blockchain technologies to allow for some of these things to be acceptable in a mainstream.
So the first phase with the technology is actually just the recordal of transactions. So effectively, that's what we're doing, is we're recording the cash transactions so then it's verified and immutable. That enables us to provide information back to the investor in such a way that they don't have to wait. The trust, we've just been talking about it, asking, in terms of projects, etc. How do you scale it? We have to prove to the cynical investors that this market is not only addressable, but pays incredibly well for the product that they get in. If it's an affordable product at an affordable price, they are remarkable payers and will do anything, in fact, to keep that asset, that wealth creating asset. They will do anything in order to do so. And that we've already proven, but how do we get that information back to the investor? And the blockchain is just a mechanism by which we can do that. And one of the aspects of the blockchain is that it's publicly available and verifiable. So obviously the confidentiality is taken care of before we publish that information to the blockchain, but then it's immediately available to the investor. Now that addresses certain other aspects on the investor side, which is going forward is liquidity and information, because that's what you need in order to really crowd capital into this environment. And that's what we're seeking to achieve on that side. So from a legislative perspective, we are not utilizing the blockchain for the crypto element, but for the recordal of information as the starting point. Obviously, in terms of transfer of value, that's when it does start to become interesting, because even demonstrating what we're doing now, we are able to demonstrate that you can reduce costs by up to 90% in terms of the transfer of value. So, but that's the next phase. And so that's in talking to the legislators and to the relevant parties to say, this is what we can do with this technology. Give us the sandbox, give us the space to do it. Let us prove what we can do and then take it forward from there. So that's the next phase. And we're in discussions with a number of African governments to do that.
Well, you have some regulators in this room, and I'm curious what kind of traction you're getting without naming names, without naming countries.
Yeah.
What kind of reaction you're getting to?
We're getting actually a very positive response because of the demands, because of the realization of how all we're trying to achieve is the reduction of cost. If we can reduce cost and improve information, we're achieving significant advances. So far, the response has been very, very positive in terms of what we're doing. As I say, in terms of the sandbox, the whole thing around blockchain is actually transparency and visibility. And that's what we're trying to do. So, from a legislative perspective, it makes it more transparent, more visible, and is actually better going forward. So that part actually, is building the case, not detracting from it.
And the success factors, how would you measure then success? The more units built, the more units sold. What do you? You're relatively early in the journey of this business that you created. What's the success going to look like?
Well, just to give you an indication of success, we started our project in Mozambique, one of the most challenging countries in terms of income levels and in terms of climate impact. In the first project, we grew the home loan market within 1 year by 5%. Now, that's a ridiculously low base, so that's not a massive achievement, but it indicates the kind of growth that can happen. We grew the home loan market by 5%. 50% of our lease-to-own, rent-to-own owners are women. And we pushed the environmental improvement by more than 20% in terms of the impact. That's just a measure on the first project. Again, all of that is measurable and reportable and verifiable in terms of going back to the greenwashing question earlier. All of that can be verified. So again, that process is just part of this reputation building for both the tenant and for the investor.
That's great. So I want to spend a little bit more time on the sustainable piece of it. And then, you mentioned, not necessarily with you, we're going to keep going around, but clearly for each one of you, this is a big piece of the both business model and the objective. I mean, go back to the theme of this conference, and maybe you people and well, if you could, the supply of housing is a huge constraint in almost any market, especially if you then add the aspect of sustainability to it, because some technologies are more expensive. No way around it. If you could talk a little bit about how you integrate it into your business planning and design of projects that are or accepting projects that would feature that.
In our case, climate sustainability is also somewhat different due to the fact that the market to date in Mozambique, in Beira, where our pilot project, where our proof of concept was initiated, has been seriously cyclone impacted. And during Cyclone Idai in 2019, more than 80% of the housing stock was eradicated. And the point is that self-build doesn't cater for that. And so every time a cyclone comes through, it's back to square one, rebuild, etc. So climate smart so sustainability is also around making it cyclone proof, is the ability to do that. And just starting the model on the rent to own actually is the start of that process, because the home is built to standards and therefore is not lost. So that's the first point. Obviously, the second point, we attempted Edge. It was a bit expensive as a process for this market. So it was challenging to implement. So we started that process with the local service provider. When I say we, not us, again, we also work with partnerships. And that was the process by which we went through. It was quite challenging because of the standards, etc., were not geared for exactly the level that the affordable housing that we're operating at was geared. So that was quite a challenge. And we also, as part of our proof of concept, developed a first affordable hempcrete home in Africa. And that also, part of it is there's a legislative environment to that, but it had to pass, because we did both a wooden house and a hempcrete house as really trying to drive the agenda. And again, it's really about market acceptance. The the keynote speaker this morning spoke about that kind of expectance, and the wooden house was met with as a casa madera. It's a, we're not going to live in a wooden house, whereas the hempcrete one was acceptable. And I think that's a key part around it. It's also around the market acceptance. We've spent more than 100 years telling people that bricks, mortar, and concrete are the way to go. And now all of a sudden we go, actually, no, that's not the route we should be going. But the market's going, don't tell us that now. I'm not interested. I want a solid house, particularly in an area that's cyclone impacted. So sustainability is also around the market sustainability, and meeting the market needs and desires is a key part of that sustainability. So it is incorporating all the elements. So just as affordability, there's also sustainability, which is multifaceted, not just around what we traditionally immediately think of.
Very good. Clearly in this building, between WordPick and IFC, this is hugely important for us as part of the strategy. So that's very consistent. Now we have give or take about 300 people in the room. We have a microphone. If any of you would like to think of a question or two for the panelists, please don't be shy. Come forward. I have one or two other things that I do want to ask them, but it'll be great to get a bit of reaction from the audience. Maybe not comments, but rather questions, if you can.
My name is Chima. I'm Managing Director of Rainbow Town Development Limited in Port Harcourt, Nigeria. One of the gentlemen spoke to the 80% of the population in the informal market. I think it was Mexico.
No, it's Glen Jordan.
Okay, and I'm curious about that because people in the informal markets are often not able to access the formal mortgage market. And I lost your narrative on how you addressed that. What's the solution to getting people, those 80%? And that's an accurate reflection of the population in the informal market in my home country of Nigeria, and indeed most of Africa. So how did you address that? What is the solution?
Build a credit record going forward based on the rental payment, as opposed to the other way around. So historically, what we do immediately is we look for formal proof of income and formality. There has to be formality. And as we said, it's not available. So it varies by place, by city, by provider, by a number of issues. And again, this is one of the joys of the new technologies, because it's around decentralization, is how do we empower the local assessors and local partners to assess this kind of information. But where it started was actually by looking at expenditure, not at income. So in other words, what is the existing, because most of the people coming into this, due to the fact of the informality, due to the fact that they rent. So what is that rental? And how do we prove that rental? Because they'll be renting. Most people are aspirational, getting back to that point. It's aspirational, so most people are living in the best conditions that they can at the price that they can afford. So we're looking actually at expenditure. So the partners are looking at expenditure rather than income, because proof of income is so difficult to justify. So that's one of the mechanisms. The other is that also historically banks and the financial institutions are very individual focused. And part of it is to look more at the family unit. So who's moving into the entity and who actually so while the one person is responsible, we look more at a family unit. So does one person have a job? Does one person have an income? And the rest are informal, because that's actually the key. That's actually one of the key criteria in the area that we're working at the moment, which, as I said in the pilot, was Mozambique. So there are multiple ways of assessing it, but there are many ways of doing it, and particularly, but in principle, it's around extending it beyond the individual, one formal person, so that can be covered. The structure is also looking at it, instead of looking at it as a mortgage structure. And again, we've structured the financial instrument historically as the set price that needs to be paid. What we're saying is we understand that income is erratic. So let's have a minimum payment and then contribution over a period of time that is required. And so therefore that's measured over a period of time of units as opposed to a monthly unit. So we look at longer periods over which that can be paid. So in other words, the larger amounts can be paid over time. Again, all of this adds to cost, and therefore we need the technology in order to reduce that cost to be able to report on that. And that's a key element in terms of what seeking to achieve. But hopefully that answers your question. But it certainly is working in that environment.
And the attractiveness of blockchain, it creates the time series of how people can read this over time, which is key for banks.
Exactly, a key for both for the investor and for the individual, because they're building their own credit record now. It's not owned by the individual, by the entity who keeps it proprietary. It's also a key part around that about extending and empowering the individual.
My name is Robert Hornsby. I'm with Global Max. We build houses in Guinea, Sierra Leone, and Ghana. And my question is about affordability, broadly speaking, because as has been mentioned, there's a lot more to affordability than just how much does the land cost, how much do the materials cost, how much does the labor cost. I can build a $100,000 house, a $50,000 house, $25,000 house. The sales and service and after sales service and payment servicing work that my team does for a $25,000 house is not 25% of the work that they do for a $100,000 house. In fact, sometimes it's 100% or more of the work that they do. And I'm curious to see or to hear from any of you, whether you own that customer relationship through that, or whether you work with people that own that customer relationship. What innovations do you see that help keep sales and servicing and after sales service and payment servicing costs down to the point that you can actually have an affordable solution?
A key part is around the service provider being as close to the customer as possible. If it's removed, the further removed we get, the more communication challenges and the higher the cost associated with that. So for us to partner with local service providers and local people who are very close to it, again, it's around decentralizing and providing the technology aspect to support that is what makes it cost effective, more cost effective.
There's always a lot of questions with regards to blockchain and then capturing the informal income, as the gentleman from Nigeria had stated. So, Glenn, is it possible for people here to see the actual technology? Because there's a lot of theory that's been spoken, but would you be amenable to people that are here now being able to speak to you and see what has actually been done? So it goes from abstract to real. And then the second thing is, conversely, Mr. Reynoldson, your program is probably most analogous to what Empowa is doing too. I'd love an opportunity to speak with you to see how your platform works, because although it's a different continent, I think the principles are similar.
So you guys can take that offline. Glenn, do you want to say yes to this question? Yeah. The leading question from the audience.
Absolutely, because it is part of the challenge. It's part of the challenge in explaining what we do in terms of making it visible. It is a key element to that. So to show the linkage from lease to own back to investor is a key part of the challenge. And so absolutely, it'd be more than willing to demonstrate that to anybody.
Very good. Not much in the way of closing remarks, but certainly public-private partnerships have come up in this conversation quite a bit, and leads and connects with the first panel. Innovation in building equity in many different ways through models like rent to own in its various iterations, but also by cutting the timeline to market, the way your company is doing this, Eddie. And also the using of technology in a way that you guys are doing in Empowa, right? So integration of sustainable practices, and that comes across in almost all four of the cases, and ultimately the case for financial attractiveness of affordable housing, which I think it needs to be repeated over and over and again. Certainly, we've kind of bought into this as IFC, but we are a mission investor of sorts, right? Can we make sure that other investors who are less mission orientated also get that message as clearly as yours, Vipul? Where do you see your company in a couple of years from today?
Our mission is to enable 1 million homes in Africa by 2030. Enable scale is part of our challenge in terms of addressing it, in terms of the markets that we're addressing, in terms of overcoming some of the challenges. There's a backlog of 50 million homes in Africa. It's the youngest population, it's the fastest growing population. The pent-up demand is there. That's not the challenge. The challenge is due to the lack of supply, due to the informality, due to the lack of the entire ecosystem, the supply is not forthcoming. In fact, the research shows that there are minimal suppliers outside of South Africa and Egypt that can develop properties, more than 500 properties. So how do we enable that? How do we enable the whole ecosystem to close is the challenge for us. But it's our mission, and it's again through decentralization. It's around enabling those at the peripherals to deliver and supporting that process through the best use of technologies, which is what we do, hence the name.
Okay, good. Thank you, Glenn. So Glenn, Vipul, Eddie, Wal, big thanks for joining us today. You're around for the next day or day and a bit, so anybody in the audience can ask you all they want, and you can show how blockchain would work.